Hey, it's Rocky here again, and in this video I'm going to show you what has been for most people the biggest missed trade of the last few years, and that is in the UST bonds. This is a weekly chart of the UST bond, and you'll see here we came up from this low, rallied up through here into the middle of 2012, and then we came back down in this nice steady pullback to 0.618 retracement of this previous range up. Then we had a small rally, we came down, made a slightly lower low, and then we've taken off, and as you can see we've gone up to new highs, and the market continues to rally as of today, which is July 10th, 2016. And a lot of people completely missed this trade. So let's look at the analysis and see how we could have known that this was going to happen. And this didn't necessarily tell us how far this was going to go, but there was a perfectly logical entry signal right down here that gave us an idea of what was to follow. So we come up here, high there, 618 retracement, and if we project from this low here to this high and then come out 50%, you'll see we had a high just here within 1 week of 50% retracement, which then gave us this final sell-off down here. And this week here, 1 week after the low, was 100% retracement in time of this rally. So we had a 618 retracement in price, a 100% retracement in time. That tells you the pullback wasn't as strong as the preceding rally. So in here, anywhere down in here, was a good place to start looking for somewhere to buy this market. The other indicator that we've looked at over and over again in shorter term charts is this one, where we have a lower low here than this low in price, but we have a higher low here on the RSI. So we had a low on the RSI there, a higher double bottom there as this came down and made lower lows, and then as this put in its final low, we had another higher low on the RSI. So as soon as it started to rally out of here, and there's a bullish engulfing week right here hidden by that line, as soon as that happened, that was a great chance to at least start taking positions in this market. And we came up, we had a high, took out that high, and there was no reason to think that this was going to go down any further. Our weekly 20 period moving average was now green by the time it got over this high here. There was no reason to be short this market, and there was every reason to be buying this market. And no one was to know how high this would ultimately go. As you can see, apart from a couple of small areas here where we had significant pullbacks, another one there, the trend has been up all the way, and now we look like we're accelerating higher into some kind of blow off top as people all around the world jump into UST bonds way too late looking at this chart because of negative interest rates around the world and the perception that UST bonds are the safest place to be. So I hope that shows you, even on a longer term chart, a weekly chart, this is going back to 2011. Then 3 years later we had a low in 2014. In January 2014 was the first buy signal. These are the kind of moves that can make you a lot of money. If you can get on down here and start leveraging up and buying more as it starts to rally, put a stop loss order in a safe place below these major swings and ride these kind of trends, that can work out very well for you, as you can see. So I hope that gives you another example of how we look at time and price retracements and divergences between price and the RSI. That's it for this video, and I'll talk with you in the next video.